Looks like we are live. It is 3:33 p.m. Eastern, August 26th, day for NVIDIA's second quarter 2027 fiscal year earnings call. Today we're going to be betting the future on what the CFO and what the CEO of NVIDIA will be saying. The live stream just getting started. You can see what some of the options are for our bets: Hyperscaler, Humanoid, TSMC, some of the ones we're going to be going over today. We have about an hour and a half until we hear from the team itself what they're going to be saying. We have about 26 minutes until the close of the market, and then we'll have about an hour to digest and use our analysis tool that you'll see right here to see what are the most likely wins that we might, or things that might be mentioned on today's session. If you haven't already, follow me at Dalton Sketch. You can read the article I write before every earnings call, before every prediction I make. You can see my analysis. We'll be going over this here shortly, making sure we're all locked and ready to go. You can see my, making sure we're all locked and ready to go. We're going to do a little sound check right here. Do a sound check right here.
Some CEOs face struggles and they don't have people to bounce it off of.
Tech Jim, I know even you have been noticing the losing streak in NVIDIA going into the print.
Yeah, look, it's not coming in hot. Now, the last couple of
Jim, I know.
All right, we are live. Yeah, guys, we're on trading on Kalshi. We have about 168,000 in volume. It's picked up. Let's see if there's a volume tool on here. Show how much it's gone today even. Earlier it was at 100,000, so now we've had about 60,000 trading. You can see some of the options we have here. I made my predictions beforehand, as this will change quite substantially over the next couple of hours as the earnings finish. Where's that NVIDIA at right now? So they're down 1% today. We have another 24 minutes until the end of closing day. We're going to be using Grok today for our analysis to teach everybody here what's been going on, maybe about some terms and now analysts that are being shared, etc., etc. We're going to do a live breakdown. We should be here probably for the next 2.5 hours, so sit tight. You can visit investor.nvidia.com, listen to the webcast and sign up, 5 p.m. Eastern. How has NVIDIA performed over the past 6 months? Up 14%. Their last quarterly earnings was in May. You can go to their website, investor.nvidia.com, where you can see transcripts. This is the May 21 right here, 16 pages. You have Jensen Huang, Colette Kress, and then you have Toisha Hari, who leads off the calls. Looks like on the last call, we had these analysts. What should be noted is how you win these bets, going down to the rules. And so this is, for example, if we want to do TSMC for one of them. So this will resolve to yes. You can buy one of these contracts for 37 cents, and if it wins, you win $1. Basically, you can basically triple your money if you bet on TSMC and it's said today. So if TSMC is said by any NVIDIA corporation representative, including the operator of the call, so this is, the representative means on this call, it's going to be the operator, the CFO, or Jensen Huang. It does not include analysts. So if an analyst comes on and they say, hey, like, tell me more about Trump, for example, that wouldn't count. Jensen Huang or the CFO, Colette, would need to say Trump in order for this to resolve to yes. Video of the NVIDIA Corporation earnings call will be primarily used to resolve the market. If a consensus by Kalshi employees cannot be reached using video, transcripts of the NVIDIA Corporation earnings call will be used according to the news publication listed in the contract. The exact phrase word or plural or possessive form of the phrase word must be used. Grammatical tense inflections are otherwise not included. Please see full rules for details. So let's go see, can we see what the highest probabilities are going? Let's go default. The highest probability starts at Hyperscalers. There's a 99% chance of that. Next is Cosmos at 79 cents. I purchased this for no at 34 cents yesterday. We have gaming, self-driving, humanoid, all the way down to Trump at 7 cents. Created this tool to go through the most recent news as well as the past 5 quarterly earnings. You can see that Trump hasn't been mentioned since Q1 2026. Let's just break that down while we're here. Let's go break that down. So he was named 3+ times over a year ago. This is about 5 quarters ago around the Middle East AI deals and policy reversals, then 0 for 4 straight calls. So he hasn't been mentioned for over a year. And now NVIDIA says the administration or the US government instead on calls rather than saying Trump. So he had about 4. He had 3 during his prepared remarks and then 1 during the Q&A. So it says going from 4 down to 0 for the past year is a decisive script change. After the H2O licensing episode, management scrubbed personal political references, likely deliberately, and now uses institutional phrasing. There's no policy headline in the cycle centered on the president and NVIDIA. The news is OpenAI's chip, memory prices, financing, data center backlash, PCE inflation, and trade retaliation. Even the trade wars items are framed around Canada retaliating, not White House NVIDIA interactions. The yes path requires either a major policy announcement, like an export license, sovereign AI deal, tariff carve out attributed to the president that Jensen wants to credit, which he has done in the past, thanks to President Trump's leadership, or an unscripted aside. That habit gives a non-zero floor, but 4 quarters of discipline plus a call agenda dominated by competitive and cost questions keep this in single digits. As you can see here, not been mentioned for the past 4. What you can see on my chart, and we'll go into it as well as we get started here at before 5 p.m. These are the 5 positions I took, taking the word Cosmos will not be said, as well as Omniverse, as well as I took gaming, self-driving, and dividend 2 times, 2+ times. So it means it could be said 2 or more times as my yes put in $100 total, $20 on each to try out my new analysis platform. We're seeing this tick up as we sit here. Omniverse looks like it is cratering. Omniverse was at what, 65? Now it's at 55. Gaming's going down. We'll see how this goes. NVIDIA. Oh, look at that, 6 months ago. Okay, so it's been going down. We're also going to go through their, it's going down. When we had it a minute ago, is at down 1%. Now we're down 1.5%. We have 16 minutes to go before the end of day. And then we're going to go take away from NVIDIA earnings here in a second. That is coming up in our next segment. Another plug, if you haven't already, go to bettingthefuture.com. You can see all of the guests that we've brought on our past episodes and the ones that we're bringing on future episodes. We're discussing everything from will Anthropic announce their IPO in 2026 to who will win the Oscar for the Best Picture 2027. What will Digger score on Rotten Tomatoes when it comes out? When will Tesla and SpaceX merge? We're all booked out for August and September. For October, we'll be bringing on solely political prediction market analysts to bet that future on that before we have the midterms on November 3rd. If you have a position, if you're an investor, founder, quant, analyst of the sort, prediction market trader, and you want to share your position on some of these prediction markets ahead of the election cycle, please feel free to come on and do so. You can apply. We have a apply to be a guest form. You also subscribe to the newsletter. I welcome you subscribing to Dalton Sketch on X, where I post my X articles on my positions before they're released here. We have about 14 minutes to go for close of day. In the meantime, what we could do until then is review my position on NVIDIA earnings call Q2 2027 for this fiscal year. To subscribers of Betting the Future, today at 5 p.m., NVIDIA reports its fiscal second quarter of 2027. Wall Street will be watching the guide. I will be listening for individual words. Kalshi runs a market on what NVIDIA will actually say during the call, whether specific terms appear in the transcript, and in one case, how many times. Most people treat these markets as trivia. I treat them as the purest test imaginable of a simple idea. An earnings call is not a conversation. It is a document with structure, and a structure can be modeled. So I built the model. It tracks every mention of key terms across NVIDIA's last 5 earnings calls, maps where in the script each term lives, and prices the probability it appears tonight. This letter is that model's first live test with real money on its output. Every position below resolves within hours of publication. As you can see, I've deployed $100, split $20 across all 5 of my positions. That'll be going through with you. Maximum payout if all 5 settle is around $237.90. We'll see what kind of return we can get on a basically day-by-day basis. Here's the full case position by position. So number one, the premise, an earnings call is a machine. Before the positions, understand what the model sees when it reads 5/4 of transcript. So in my model that you'll see here that we'll go through, I put in the rules of this Kalshi market. I also put in the 5 past quarters of transcripts, as those were the most readily available on the NVIDIA website. And then I also digested the news that has been coming out over the past quarter, especially the past few days and past few hours, to give ourselves an analysis of what are the most likely terms and why, as well as an edge map. This is where I got all the data from. This would be great to go through, as well as, while we have it right here, the model read as of today. So this is a Q2 fiscal year 2027 print positioned by the press as a referendum on the entire AI trade. Options imply a $280 billion market cap swing, and the dominant pre-call narratives are OpenAI's Jalapeno custom chip allegedly beating GB300 Blackwell, memory cost inflation pressuring gross margins, hyperscaler capex durability, and NVIDIA's expanding investment financing machine. Blackstone style lending against AI chips, perplexity stake talk, $1 billion weekday free cash flow. That mix strongly favors data center vocabulary, hyperscalers, capex, supply, margins, capital allocation, continues to squeeze the physical AI graphics platform names, Omniverse, Cosmos, that used to anchor Jensen's prepared remarks. Dead narrative terms from the 2025 policy cycle, H2O, Trump, Arizona, Taiwan tariffs have now been silent for 3 to 4 consecutive quarters and should stay that way absent a specific policy headline. Safest yes bets are structurally scripted items, gaming versus segment reporting, hyperscaler via demand commentary with capital return language, dividend 2 times, a genuine coin flip that the record free cash flow story tilts slightly upward. The one thing for the premise is some words are mandatory. The CFO, and we'll go get her as well. Where was she detailed? She was in the last transcript. Name is Colette. Colette Kress. We'll pull her up. Colette Kress. Bam. So Colette Kress, and now we'll go back to it. The CFO prepared remarks, walk every reportable segment every quarter without exception. Data center, gaming, professional visualization. We have gaming. Don't forget we have gaming. These words have a structural floor of one mention. Product callouts have life cycles. A platform gets launched, earns a scripted sentence for a few quarters, then decays into silence as the narrative moves on. So whenever something gets released or launched, they mention it for a couple of quarters, and then they move on with their lives. Things are moving so quickly that NVIDIA right now is launching now new chips and new hardware and new software every year. They're not waiting 2 or 3 or 4 years to do so. It's moving so quickly right now, so these names tend to move on. The decay is visible in the counts. Two mentions, then one, then 0. When a term hits 0, it's been rotated out of the script and it stays out until a fresh announcement brings it back. So to give you an example here of that, maybe we saw Omniverse at 7, then 2, then 4, then 1, now 0. H2O 13, 14, 1. Cosmos 2, 1, 1, 1, 0. TSMC 3, 1, 3. So we're looking at that. Q&A is a second door, so that's a part of this is that they have the prepared remarks and then they have the Q&A at the very end. Some terms live only in prepared remarks and die with the scripts. Others have 2 entry points, the script and the analysts, make them structurally more durable. And then 4, the news cycle writes the questions analysts ask about the financial press covered in the preceding 90 days. So Like, for example, the big topic was OpenAI releasing Jalapeno, their first custom inference chip. So that was pretty big. I'm sure that'll be talked about a lot today. OpenAI releases its report. There's a lot of OpenAI stuff. We're now at 175,000. 7 minutes to go. Let's see where NVIDIA is at right now. 1.63%. So it's been going down over the past hour. Still at over 5 trillion. I believe we will still continue to be over 5 trillion by the end of this call, but who knows? Let's see what ends up happening here in 6 minutes when they release their earnings report. My first position is Cosmos. We'll go here, check it out. Bam, Cosmos. You can see the market has it at 78, 79 cents. We go here, Cosmos 79 cents. The model I created has it around 33 cents, so about 45 cents of edge. So you can see the mentions the past few quarters. You can see where it appeared. And the breakdown, here's how I describe it. The count trajectory across the last 5 calls, 2, 1, 1, 0. That is the textbook decay curve of a launch era call out fading into the background, ending in full retirement last quarter. Cosmos only ever appeared in one place, the scripted physical AI sentence listing software stacks alongside a robotics customer name. It has never once been a Q&A term, which means it has exactly one door back into the transcript and someone has to write it into the script deliberately. The news cycle since May points everywhere else. The OpenAI jalapeno chip story, the poolside model factory deal, DLSS 4.5 at Gamescom, Bluefield 4 and Spectrum X at Hop Chips, and tonight the Rubin ramp. The market says 65% this word gets spoken. The model says the word is gone until a world model announcement revives it, and there isn't one in the flow. Cosmos, no at 34 cents. $20 could become almost $60. That's a 3xer right there if we can. Position number 2, Omniverse. My second one that had the biggest turnover. What we're also going to do is after the earnings come out, what we'll be able to do is run another analysis. This will update the model with the latest news from the earnings. So this will swing things. We're going to snapshot that right now. And then so that we have that for later. So you can see as of, right now, we can see as of it how it changes over time. And then after it's all done, we'll lock down the predictions and then we'll share our feedback with the model so we can learn from it over time. Enough of me showing off. Let's look at Omniverse. So had a steady decline, 72410. Omniverse was the anchor of the digital twin physical AI paragraph, but has been squeezed out of data center demand and margin defense take over the script. So we're looking at Omniverse, the steepest decline in the entire set. Right now the market's showing it at 50 cents. Is it still showing it there? Omniverse 52, yep, 50 cents. We have it at around 24 cents. And so you can see how it's evolved over time. Monotonic decay ending in silence is the strongest retirement signal the model produces. Omniverse lived in the enterprise digital twin paragraph, usually paired with a manufacturing customer, and like Cosmos is almost never a Q&A term. Messaging has been absorbed into broader physical AI branding, and no physical twin headline exists in the current cycle to resurrect it. One honesty note, these first 2 positions are correlated. If Jensen delivers his full physical AI monologue, Isaac, Cosmos, and Omniverse tend to ride in the same sentence and both nodes die together. Let's ride. That's why we bet the future. I accept that correlation knowingly because that's base case, a call consumed by Rubin. This is, yeah, compute economics in the guide leaves no room for the riff. We're going to say, describe Vera Rubin to us like we are a 12-year-old. What is it? related to NVIDIA. I think Elon bought a lot of these bad boys for his operations as well. Vera Rubin is two things at once: a real scientist who changed how we see the universe, and the name NVIDIA gave its newest giant AI computer. NVIDIA names its big AI chip generations after famous scientists. They named the new platform Vera Rubin after her. Rubin, the new super powerful GPU. NVIDIA Vera is NVIDIA's new custom CPU. They get wired together with super fast connections. So 72 GPUs plus 36 CPUs act like one giant brain in a single rack. Wish we had that option to bet on here, but we don't. We do not. So anyways, Omniverse betting 20 comes around 55, almost another 3 extra right here. Fingers crossed. 1 minute away from the bell ringing. Down 1.5% today. NVIDIA had a little bit of a bump back up here. 1 more minute to go. 1 more minute to go. I think we're going to be able to see NVIDIA earnings. Let's go see it. NVIDIA earnings. The report's going to be out here very soon. The reports will be released after the market closes at 4:20 p.m. Eastern, so in 20 minutes, followed by a conference call at 5 p.m. Right now we have NVIDIA at $210. We finished out the day? Almost. Be on here for another 2 hours. We're just getting started. Now we're at 178,000. I wonder if we're going to get up to 200,000. Ooh, what did we just see there? Whoa, 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 whoa. Cosmos went up. Now to number 3. Gaming. I took that at 76 cents. What are we at right now? That's fallen. Not fun. To 61 cents. Let's look at gaming on here. Come on, my guys. Each of the 5 past, it's been mentioned. Gaming is a reported segment, and for some reason, guys, this might be a good buy opportunity at 59 cents to 2 extra money over the next 2 hours. Not a bad return. Moving back up, self-driving, we'll get into that. Gaming, the ballast of the portfolio. Gaming is a reportable segment, and the CFO has read its revenue line on every call in the data set. 6 mentions, then 2, 2, 3, 1. The count compresses a data center swallows the company, but the floor is structurally one, and even the leanest script in 5 quarters cleared it. Top of the mandatory disclosure sits fresh optional material from Gamescom DLSS 4.5, ray traced nanite, native anti-cheat. The only path to know is the segment being renamed mid-script, which has never happened. The market is offering 24 points of edge on a structural near certainty, and I will take boring money every time it's offered. Fingers crossed on gaming. That should be a 2xer. What is that? $20 becomes 26. So we win $6. About 30% return right there. Nobody's mad about a little bit of a 20 or a 30-cent return right there. Self-driving. Go see self-driving, folks. Hope you guys are all enjoying this model I put together for you. Self-driving. Also present in all 5 prior calls. Colette. Ramp up self-driving across a number of customers. Colette. Driven by self-driving solutions. Colette again. Driven by self-driving solutions. Colette again. By robust demand for self-driving solutions. A lot of them come in the Q&A, so that's something to note. Last one, he didn't even mention it till the last one. But self-driving, I think they just did a, go to the notes, go to Grok. Did NVIDIA do any self-driving deals in Q2 fiscal 2027? Share the biggest news and developments from this. NVIDIA's biggest self-driving activity was a cluster of Drive Hyperion Level 4 robotaxi deals announced in Taipei. Wow, it's got a lot of self-driving stuff. You also saw SpaceX or Tesla, soon to be SpaceX AI and Tesla, come out with their cybercabs this year, coming out with their cybercabs. We have Uber, Foxconn, BYD, Uber, Hyundai, Toyota. Lots of stuff going on with self-driving and the use of NVIDIA. So anyways, back to it. Self-driving, yes, 70 cents. Trying to get a 50% return on this, essentially. The most durable discretionary term in the data set. Present in 505 calls with 1132. Unlike Cosmos and Omniverse, it has 2 doors in the transcript. Door 1 is the CFO's automotive commentary, where the segment's growth is attributed to self-driving platforms. Door 2 is Jensen's habitual framing that the killer application of physical AI, robotaxis, and robots. And when he says it, he says self-driving cars, not autonomous vehicles. The news since May. When he says it, okay, so I guess Colette's the one that says self-driving, but Jensen says autonomous vehicles. The news since May keeps the topic alive. Waymo's international expansion, the robotaxi build-out across American cities, and the analysts hunting for NVIDIA's diversification story beyond training compute. The no path requires perfect substitution to AV language, plus a call that skips automotive color entirely. 5 straight quarters say that doesn't happen. Fingers crossed. Was being priced pretty reasonably here. A little bit of an edge in this direction. What's going on with the market? We're at 179 vol. All right, one last one. Dividend being said 2 or more times. Yes at 28 cents. Put in 20 to win 70. More than the 3xer. This is the best price position on the board and the one where the model and the news cycle points in the same direction. The count runs 11023, rising, and the May spike is a documented cause. At the Q1 report, NVIDIA authors another $80 billion in buybacks and raised the quarterly dividend by 2,400%. The bear case is reversion since the August script typically contains one line. We returned X billion to shareholders in the form of share repurchases and cash dividends. One mentioned position dies. So this is where the second door swings open. Financial press has spent the summer on NVIDIA's balance sheet. The Financial Times balance sheet as a service piece. The New York Times on Wall Street scrutinizing the deal machine. The $105 billion in lease guarantees to OpenAI. A capital allocation question tonight is close to certain. When Colette answers that question, she historically pairs buybacks with dividends in the same breath. The market prices the second mention at 28 cents percent. The model says the question forces it well past a coin flip. So these are the ones we have. Cosmos, no. Gaming, yes. Self-driving, yes. Omniverse, no. Dividend, yes. it should be noted to do your own research. This is a complete gamble. I'm not giving investment advice. All the positions I'm sharing are the ones that I'm trading, and then I have a biases in. So that should be known. Great. 4:08 p.m. We are getting close. 12 more minutes. Let's finish this bad boy up. Again, follow me at Dalton Sketch on X in order to follow this article together. 3, the portfolio logic. Look at the shape of the 5 together, but the construction is the point. 2, retirement no. So Cosmos and Omniverse carry the same dead underlining thesis that dead script language stays dead and pay a combined 112 on $40 if right. That'd be a nice 3xer just on those two. 2, structural yeses, gaming and self-driving are floor bets with thin but nearly free edge. Balance that keeps the portfolio from being correlated swing, right? Cosmos and Omniverse weren't even said this last quarter. Gaming and self-driving have been said in each of the past 5. One last is this. This is the biggest payout one, I think. Dividend 2+ times. So is the asymmetric engine. 2.5 to 1 payout and mechanism. All 5 settle. $100 becomes around $240. That is not the expectation, and I want to be precise about what is being tested tonight. Any single leg can die on a phrasing choice. What should not happen if the model is sound is the systematic failure, the retired words roaring back while the structural floors crack simultaneously. Individual losses are variance, correlated losses are information about the tool, and that is the real trade here. The positions risk $100. The model, if it works, prices every scripted corporate event on every exchange, earnings call, keynotes, Fed pressers, product launches. Tonight is not 5 bets, it is 1 bet on the idea that the most watched executives in the world are more predictable than the market thinks because they are reading from a document with rules. Again, $20 on each. The call starts at 2 p.m. Pacific, so here in 50 minutes, by the time the market closes on this, every claim this letter will have been graded. This is not financial advice. Prediction market contracts involve risk of total loss. I hold the positions described above. Nothing here should be read as a recommendation to trade. All right, NVIDIA closed today at $209.66. What is it up right now? So it's a little bit up after hours. 10 more minutes until earnings come out. There's some more visuals. You can see gaming here, self-driving, dividend. Took those 3, and then I took the no for Omniverse and Cosmos. We're going to do a run analysis right now before we have the earnings come out. To take a minute. Let's see if things have changed. Not much. We're still here. We're still here. Got 8 more minutes. switch off while we go to the webcast link. Okay, we'll be able to access it 15 minutes before it begins. Pull up our boy Jensen Huang. We have next to Colette. And then we're also going to pull up Ushia Adi. This is the person who's going to be leading us off. You should Toshia first, then Colette, then Jensen. I'm going to go watch some NVIDIA videos while we wait.
Hi, I'm Dion Harris, Senior Director of HPC and AI Infrastructure here at NVIDIA. So we've recently announced a number of Vera Rubin platform updates, from the Vera CPU, which delivered 1.8x more performance per loaded core versus traditional x86-based systems, to the importance of the scale-up NVLink fabric switch that demonstrated 2x compared to off-the-shelf Ethernet, to the 10x measured performance per watt versus Blackwell that was delivered on the CoreWeave platform. CoreWeave was able to demonstrate real measured performance on our Vera Rubin platform. Not projections, not estimates, but real silicon measurements. This demonstrates the readiness of our platform, showing that we're in full production and the entire ecosystem is ready to take it to market.
4 more minutes to go. We'll watch one more video. Let's see what else we launched here recently.
In this demo, we are going to show you how an on-device local agent can boost productivity for developers with RTX Spark. Imagine we are maintaining an open-source badminton scheduling website. This is a live website and its codebase is on a GitHub where the community contributes new features. It's Monday morning and Slack is blowing up. Something happened to our website over the weekend and we haven't even had our first coffee. Luckily, we have a long-running Hermes agent on this laptop that monitors all of our communication channels. So
Hermes was also an option right here. Hermes at 14 cents. Throwing that out there.
we can say,
Hermes AI agent.
"Hey Spark, what's going on?"
Let me check what's on your plate right now.
And it tells us a prioritized list of issues, including the urgency. It appears users can't book appointments. That's pretty serious. We can check the website. And I see no slots are available for reservation. This is a big problem, so we are going to ask the agent to help debug the issue. Please investigate the first issue and help me fix it.
Let me open the editor to investigate and fix the top priority issue.
With the RTX Spark's 128 GB of unified memory, a local Qwen 3.6 model can ingest the entire code base and pinpoint the root cause in just a few seconds. Actually, the whole code base fits in context at once while also running the local speech recognition and text to speech models at the same time. The Hermes agent finds the issue and suggests a fix. We can now review and make any changes and accept it. Now, normally we would have to rebuild the app, QA it by clicking around and verifying everything by hand. But we still need our coffee, so instead we can delegate this tedious task directly to the agent. Please run a QA pass.
Running a QA pass now.
It rebuilds the site, spins up a computer use agent to navigate and test the UI on its own, and merges the fix, while I get mine. And that's it. The fix is live and users can book again. There were a few more issues going on during the weekend, but I still need to finish my cup. So I can actually text the agent from my phone to work through the rest of these. Local AI agents powered by RTX Spark can completely change the workflow for developers, freeing up time for you to focus on building features while repetitive tasks can be offloaded to agents. Thanks for watching and check out our NVIDIA RTX Spark social channels for more.
All right, one more minute to go. One more minute to go before we have the earnings. See. At close CNBC, NVIDIA earnings report. Let's see. Let's see. No earnings report as of yet. Let's see what's going on over here. Things are changing. Go to X. NVDA. Latest. Kalshi Finance. All right. So revenue 96 billion versus the estimated 92 billion. Earnings per share at $2.22 versus $2.10 estimate. So they beat earnings. Now let's see how their stock is looking. Oh, it just went down. 2% as it goes. All right, we'll be back on in 27 minutes, 30 minutes. Before we watch it live together. Note for future reference, I should have started this after the earnings report came out. So there was plenty of time, 40 minutes to go through my analysis, my breakdown before we go into the 5 p.m. Didn't need to be 2.5 hours. It could have been an hour and a half. We are live once more. All right, let's go to the event. Blam. Play lobby music. Again, we're looking for them to say yes gaming, yes self-driving, dividend twice, and not say Cosmos or Omniverse. We're gonna go do run analysis one more time, and then we're gonna lock these predictions. Yeah, this is the shit I'm talking about. We'll mute this a little bit. This is what I hate when NVIDIA or any public company beats their earnings and then they freaking take a dive. That's why we do betting the future. That's why we do prediction markets, so that when we're right, we get paid. When we're wrong, we don't. Black and white. Our analysis done almost. What's it at now? Okay, it's only down 10%. Great numbers. Jensen Huang, AI has reached its inflection point. We will see what he means by that. Seven minutes till game time. Game time, 2 minutes to go. We are looking. What we got? Ran the analysis again. Cosmos looking good. Omniverse still looking good. Took a dive right there. What it looked like. Gaming still looking good. Dividend, self-driving. All right. Block these predictions. And afterwards we'll score it to see how well we did. Right. Come on, Toshia. Come on, Colette. Come on, Jensen. Looking for gaming, self-driving, looking for dividend 2 times, not looking for Cosmos, not looking for Omniverse. We live? Live, baby. We are going live.
Good afternoon. My name is Tiffany, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's second quarter earnings call.
Let's go.
All lines have been placed on mute to prevent any background noise.
Good call.
After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Toshia Hari, you may begin your conference.
Thank you. Good afternoon and welcome to NVIDIA's conference call for the second quarter of fiscal 2027.
Right here, VP.
With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2027. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 26, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshia. We delivered another outstanding quarter with record revenue, operating income, and EPS. Total revenue of $96 billion, more than doubled year over year as growth accelerated for the 4th consecutive quarter. The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers.
Come on,
we expect to grow revenue by approximately 70% in fiscal 2028. This is a supply-constrained outlook. Q2 data center revenue increased 18% quarter over quarter to $89 billion, with strong contributions from both sub-segments, hyperscale and ACINE, which includes our NeoCloud, industrial, and enterprise customers.
Come on.
Hyperscale revenue of $49 billion grew 13% sequentially, driven by sustained strength in Blackwell. reinforcing that more compute drives more revenue. As new GPU capacity comes online, our hyperscale customers delivered strong financial results in the quarter with accelerating revenue growth and expanding margins. With cloud industry backlog now greater than $2 trillion, CapEx by the top 5 hyperscalers is expected to reach nearly $800 billion in 2026 and $1.3 trillion in 2027. Today, we are delighted to announce an expansion of our partnership with AWS. Building on its already vast installed base of NVIDIA compute, AWS is deploying an additional 2 million GPUs starting this quarter through the second quarter of fiscal 29, along with Vera CPUs, some integrated with Rubin, others standalone. AWS will serve NVIDIA Nematron family of open models on Amazon Bedrock and SageMaker. Amazon will also adopt our full physical AI stack, Omniverse, Cosmos, Isaac, and Jetson, to power its fleet of warehouse robots. ACI&E revenue of $40 billion increased 25% sequentially and 138% year over year. Growth was driven by NeoCloud capacity additions to meet the rising demand from enterprises, AI startups, and sovereigns, as well as hyperscalers purchasing capacity to supplement their own build-outs.
All right.
Using NVIDIA DSX reference designs, our NeoCloud partners are bringing capacity online faster and at lower token costs.
Those are the two I said no.
They are expected to exit the year with 8 gigawatts in total installed capacity, up from approximately 3 gigawatts at the end of 2025.
Nice. Now we're looking for gaming.
Incredibly, we are seeing demand acceleration even at our scale. Customers' forecasts point to our growth doubling next year. However, as I mentioned earlier, we expect to grow approximately 70% as we are supply constrained. NVIDIA Compute is fully utilized across every cloud we serve. The economic value it generates for our hyperscale, NeoCloud, and AI lab partners keeps rising. Besides building the best AI computing technologies and the most capable supply chain, NVIDIA has 3 unique capabilities that are engines powering our growth. First, NVIDIA's architecture runs every model, and we're growing share as closed and open model adoption grow. Closed and open models alike, adoption is skyrocketing. NVIDIA runs the leading closed models, OpenAI, Anthropic, Grok, Meta, Gemini, and the leading open models, TML, Mistral, Quinn, Kimi, GLM, DeepSeek, Minimax, and Nematron.
Cosmos and Omniverse.
We're great at small models and giant ones, large or video, auto, regressive, or diffusion, in the cloud or in the edge. NVIDIA is great at training, great at inference, great at agentic workloads. One platform, fungible for every model and workload, durable for the entire lifecycle of AI. That combination of performance, fungibility, and durability is what makes NVIDIA the productive and financeable compute infrastructure. Our second unique capability is our full stack AI factory platform that is expanding our share of the data center TAM. Since Hopper, our revenue opportunity has grown from roughly $18 billion per gigawatt to $25 billion with Blackwell, to $40 billion with Vera Rubin, which now spans Vera CPU, Rubin GPU, NVLink, InfiniBand or Ethernet, and Grok LPU announced earlier this week. Our ability to extreme code design across GPU, CPU, NVLink scale-up networking, scale-out networking, systems, algorithms, and software enables us to deliver X-factor performance gain every generation. Vera Rubin exemplifies this, delivering 30x higher throughput per megawatt and 35x lower token cost relative to Grace Blackwell Ultra.
Wow.
We commenced production shipments of Vera Rubin earlier this month. Having already received purchase orders from every major hyperscaler, AI cloud, and system OEM, we expect Vera Rubin to mark the fastest product ramp in NVIDIA's history. Our networking business had another record quarter with revenue growing 18% on a sequential basis. Spectrum X Ethernet, which grew 2.6x on a year-over-year basis, is already helping us become the largest and fastest growing network company in the world. Rising adoption of agentic AI is driving an acceleration in demand for data center CPUs. Our Grace CPU, introduced in 2021, has been a great success, with revenue on a trailing 12-month basis exceeding $5 billion. Today, we are in full production of our next generation Vera CPU. As a standalone product, Vera expands our TAM even further. Vera completes agentic tasks 1.8x faster on the spec benchmark and provides 5 times the bandwidth per watt than any other data center CPU. We expect Vera to be deployed by every major hyperscaler, neocloud, AI lab, and system OEM, with shipments already underway to our lead partners, including OCI, SpaceX AI, and starting this quarter, AWS. We continue to see demand for approximately 20 billion in total server CPUs. And based on our customer demand and improving supply outlook, our preliminary expectation is for CPU revenue to more than double in fiscal 28, positioning us as one of the world's leading server CPU suppliers. Since the announcement of our Grok partnership last year, we've been working to unite NVIDIA's high throughput and Grok's high interactivity architectures. At Hot Chips earlier this week, we announced that Grok 3 LPX, our first rack-scale LPU system, is in full production and already setting records, demonstrating nearly 4x the number of tokens per second against the next best alternative on our artificial analysis benchmark. We expect to ship Grok 3 LPX in volume later this quarter to early adopters. Nebius will be the first. Today, we're not just selling the best chips, we're selling a full-stack AI factory platform, offering superior economics for customers and capturing a bigger share of the data center TAM. Our third unique capability is the combination of our full-stack AI factory and rich CUDA ecosystem, allowing us to extend AI into markets a single chip alone can never reach. Beyond the hyperscalers lies a massive market anxious to adopt AI, customers with no interest in designing their own custom silicon. NVIDIA's fully proven full-stack platform is uniquely suited to help sovereigns, neoclouds, and enterprises build their AI infrastructure, bring it to full operation, continuously optimize it through CUDA software, and connect it to offtake demand from our vast developer ecosystem. Hyperscalers will remain a major growth driver.
Loves hyperscalers.
But non-hyperscaler growth, our AIC and E segment, spanning sovereign, regional neoclouds, enterprise, edge, and air-gapped data centers, will represent roughly half of our data center business. Our AI-native startup ecosystem, developed and running primarily on the NVIDIA compute platform, is scaling at a rapid pace. Global VC funding in AI, roughly 70% of which is spent on compute, exceeded $400 billion in the first half of 2026, surpassing the $265 billion raised in all of 2025. Nearly 20 companies, including Cursor, owned by SpaceX, Figma, and Together AI, now exceed $1 billion in annualized run rate revenue, up from 13 companies in Q4 of last year, with vertical enterprise software logging the fastest growth. In enterprise, on a trailing 12-month basis, on-prem revenue in the automotive vertical reached $8 billion, while financial services, manufacturing, and healthcare combined contributed $7 billion in revenue. Hudson River Trading and Jane Street are leveraging NVIDIA's powered AI factories to accelerate quantitative trading. Samsung Electronics is using NVIDIA Culitho to achieve up to 20x greater performance in computational lithography, while Bristol Myers Squibb is investing in Vera Rubin AI Factory, a fast follow to the Roche and Lilly buildouts, as drug R&D timelines compress from years to months. In sovereign AI, our business, primarily through the regional neoclouds, grew 35% sequentially and more than tripled year over year in Q2. A country or region can allocate land and power directly to a regional cloud partner in ways it never would to a foreign hyperscaler. We don't own a cloud ourselves. We are a neutral partner to every sovereign and neo cloud. And because NVIDIA compute is productive, fungible, rentable, and durable, regional cloud interest is surging around the world. We helped CoreWeave, Nebius, and Nscale build entire infrastructure businesses, and neoclouds are emerging everywhere. Firebird in Armenia, Kasaba Technologies across Africa, GMI Cloud in Taiwan, Yoda and NASA in India, Firmus in Australia, YTL AI Cloud in Malaysia, pairing local land, power, and operating expertise with our platform. Last month, we announced a partnership with Noetra, Japan's national AI company, to build an NVIDIA DSX AI factory that will create open models to power AI agents, digital twins, robotics, and physical AI applications. South Korea's LG and Hyundai Motor Group are partnering with NVIDIA to build and scale AI. And in Europe, a record 35 new NVIDIA-powered AI supercomputers were unveiled to advance industry and scientific breakthroughs. Neoclouds are seeing strong demand pipelines from many diverse off-takers. Rather than allocating their entire capacity to a single long-term offtake guarantee that lenders typically require to finance a data center independently, we have introduced a revenue-sharing structure. NVIDIA provides a take-or-pay commitment on a portion of the facility's capacity, a minimum revenue guarantee that gives lenders the confidence to underwrite the project, and in exchange, we share in a portion of the neocloud's revenue earned above that floor. Independent capital still underwrites every deal on its own merits. We're not making loans. In this model, we get paid twice, once on the hardware sale and again through the share of rental revenue, a highly reoccurring stream layered on top of a one-time equipment purchase. Over time, this model can expand our addressable market and create reoccurring usage-linked revenue stream alongside our core platform revenue, with the potential to drive billions in revenue over the medium to long term. Together, NVIDIA's three unique capabilities: a platform that runs every model, a full-stack AI factory platform capturing more of the data center TAM, and a CUDA ecosystem that extends AI into markets no single chip could reach alone, reinforce one another, and are the engines of our growth. Let me update you on our progress with our Frontier AI Labs. The Frontier AI Labs have extraordinary demand for training and inference compute, but they are growing faster than what their balance sheets and credit profiles can support. They have rapidly growing customer demand, yet still lack the decades-long infrastructure contracts and investment-grade financing capacity needed to secure the AI factory infrastructure independently. In other words, their growth isn't limited by their technology or customer demand. It's limited by compute. For these companies, more compute means more intelligence, more users, and more revenue. NVIDIA is needed to help power this flywheel.
Hermes was sitting there.
First,
Oh,
we've invested nearly $50 billion in the
25
Frontier
seconds.
AI labs. This was a meaningful commitment, but it
Hermes was
represented a small fraction of our expected free cash flow over the same period. Further, to support the Frontier Labs infrastructure buildouts, we recently announced partnerships with 6 of the world's leading infrastructure capital providers: Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR, to establish financing platforms that will raise over $500 billion of third-party capital. With these partnerships, building on our unique, fungible, and durable computing platform, the AI labs will be able to build and assess AI infrastructure funded by long-term institutional capital at relatively attractive rates. Last week, we announced that we secured land power shell capacity through our partnership with SoftBank Energy to exclusively host NVIDIA compute at their Portsmouth campus. The initial deployment, expected to support 4.25 gigawatts of AI factory capacity, will be utilized by OpenAI. Each generation of NVIDIA AI factory systems deployed at Portsmouth could represent approximately 1.5 million NVIDIA GPUs. And over 20 years, the site could support multiple upgrade cycles. Here's the essential economic point. The LPS commitment secures a long-lived AI factory site, while the NVIDIA compute within the data center can be upgraded repeatedly. This project deepens our long-standing partnership with OpenAI. OpenAI has committed to substantially deployments of NVIDIA AI infrastructure through 2030. OpenAI's existing and planned commitments represent approximately 12 gigawatts of NVIDIA compute. For another Frontier AI lab, we will provide selective credit enhancement for nearly 2 gigawatts of compute. This complements the substantial NVIDIA compute capacity they've secured independently without NVIDIA's credit support. We recognize the scale of this support, and we know some will call this circular financing. We see it differently. We're going through a major computing platform shift, the creation of one of the most important technologies in human history, and these are once-in-a-generation companies. Their technology leadership is proven, and their customer traction and usage are skyrocketing. We expect them to become the largest technology companies in history. We believe these investments, measured against the strength of their demand, the business they create for us, the ecosystem they build on NVIDIA's platform, and the equity returns on our invested capital, will be excellent. And our risk is limited. The NVIDIA compute platform is fungible and durable and can be redeployed to support other customers. For context, we expect demand from the AI labs, for which we expect to leverage our balance sheet to contribute toward roughly a quarter of our business next year. This remains compute we ship will be consumed by investment-grade customers or those that are backed by one. In Q2, we shipped less than 1% of our total data center revenue in Hopper 200 products to customers based in China in accordance with the US government licenses. Current Hopper shipments are dilutive to corporate gross margins, and given ongoing geopolitical uncertainty, there is no China data center compute revenue in our forward outlook. Moving to the rest of the P&L, GAAP and non-GAAP gross margins were both 75%, largely unchanged from last quarter due to a similar product mix. GAAP and non-GAAP operating expenses were up 10% and 11% sequentially, primarily due to high compute infrastructure costs and compensation and benefits costs. Our non-GAAP effective tax rate of 16% increased from a year ago, primarily due to higher revenue. On our balance sheet, inventory increased to $32 billion as we prepared for the Vera Rubin launch. Days of sales outstanding increased to 60 days, reflecting extended payment terms for large purchases by certain investment-grade customers to be shipped over multiple quarters. In Q2, we returned a record $26 billion to shareholders, $20 billion through share repurchases, and $6 billion through our quarterly dividend of 25 cents per share. Relative to our plan to return 50% or more of free cash flow, we returned 60% on a year-to-date basis.
One more.
And going forward, we intend to increase and return excess free cash flow net of strategic uses. Let me turn to the outlook for the third quarter. Total revenue is expected to be $108 billion, plus or minus 2%. We expect sequential growth to be driven primarily by ACI&E with data center, while growth in hyperscale is expected to re-accelerate in Q4 and into fiscal year 28 as supply of Vera Rubin grows over time. We see Vera Rubin accounting for about 20% of data center revenue in Q3. Looking ahead, our preliminary expectation is for fiscal year 28 revenue to grow approximately 70% year over year. Although we will work to close the supply-demand gap, we expect supply to remain a bottleneck at least through the end of fiscal year 28. Many of you have expressed concerns regarding our gross margins as component costs have risen significantly. As you are already aware, we are experiencing extreme pricing conditions in memory. The magnitude of the price increase has exceeded our prior expectations and are headed even higher into next year. As a result, we are resetting expectations today. For Q3, we expect GAAP and non-GAAP gross margins to be 74%, plus or minus 50 basis points. We expect margins to bottom in Q4 in the 71 to 72% range, before settling at 72 to 73% in fiscal year 28, as executed price increases take effect in Q1. We want to be direct about this rather than let it linger as an open question. Memory scarcity today is being driven in large part by the AI build-out itself, and unlike a component that simply raises our cost with no offset benefit, tighter memory supply is a symptom of the same demand surge that's driving our own growth. We have long-standing, deep relationships with all three major memory suppliers, and we're working closely with them to further increase the capacity our roadmap requires. GAAP and non-GAAP operating expenses are expected to be approximately $9.2 billion and $9.0 billion, respectively. For the full year, we now expect OpEx to grow in the low 50s, driven by a broadening of our product portfolio and further increase in the usage of AI tools, which is already and will continue to enhance engineering productivity. For full year, fiscal year 27, we continue to expect GAAP and non-GAAP tax rates to be between 16 and 18%, excluding any discrete items and material changes to our tax environment. With that, we will now transition to Q&A. Operator, please poll for questions.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster.
What the heck?
Your first question comes from the line of Joseph Moore with Morgan Stanley. Your line is open.
Come on.
Great, thank you. I wonder if you could give us color on the 70%, and what gives you the confidence to guide a full year out? You haven't been doing that. And then what's the gap between that amount of growth and the 100% demand growth? You know, what is the kind of key constraint that separates those numbers, and could you close those gaps over time?
Yeah, thanks, Joe. As you probably are aware, AI has become useful, and the AI agents that are being adopted everywhere use an enormous amount of compute. First of all, the large language models are larger than ever because they're smarter than ever, and these agents go through reasoning and planning, multiple turns of tool
Can't believe
use,
that gaming
the amount of compute
not said
necessary for an agent versus a human using it is probably 15 to 100 times, depending on the type of problem you're trying to solve. And so the amount of compute necessary is just extraordinary. That's a factor that almost everybody sees. The part that people don't see about our growth, because we're practically singular because the nature of how we deliver products. I mean, we're the only company in the world that creates and builds, offers an entire AI factory platform, a full stack system. And customers can still mix and match. However, most companies just don't have the skills to do that or desire to do that. And so there's an entire part of the market that we experience growth. There's sovereign AI, the regional AIs, the neo clouds, their AI startups, their enterprises, where we're seeing, which represents about half of our business, and that's growing 100% a year. That part of the world's computing is likely to be larger over time than even what we're currently experiencing in the cloud. And so, so I think the demand that we see is driven by all of those factors. It is also the case that you can no longer procure technology per se and stand up these infrastructure. You've got to go secure the land, power, and shell, which oftentimes is a couple, 2-3 years out. All of the rest of the supply chain necessary to align the construction, the power, the cooling, all of the labor that's necessary. And AI infrastructure is creating so many jobs all over the United States and all around the world. It just takes a lot more planning. And so we're involved in securing infrastructure now, further down the pipeline. Just as a long time ago, people asked me, why is it that we're working with memory suppliers when we're a chip company? And today people understand it's really quite genius that we were working on our supply chain so far upstream. We work with power generator companies. We downstream. We work with land, power, and shell companies all around the world, and that helps prepare all of this computing that's going to be built that will ultimately deploy for our ecosystem and our customers. And so we just have a lot greater visibility now, upstream and downstream. It is the case that we've never forecasted or never guided to a year in advance. And even though our demand is much greater than 70%, our supply allows us to confidently deliver 70%. And we're going to continue to work with our supply chain to increase on that. But what we wanted to do is to be consistent with everybody, from our customers, our shareholders, our supply chain. Everybody sees the same view. And the reason why that's important is because everybody's putting a lot of resources at play. And so we wanted to make sure that everybody has the same set of information. And we've got a huge year coming up next year. And it's going to be pretty extraordinary.
Your next question comes from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's tremendous investor focus on your inference market share. Can you speak to the evolving workloads you're seeing with agentic AI and how you see your share evolving year over time, particularly when you reflect on the growing value of the TAM you're seeing with each new full stack generation, your expectation for greater growth from ACIE, and then also including Grok 3 LPS. We'd love to hear your thoughts.
Yeah, thanks, CJ. The AI lifecycle is getting way more complex than it used to be, and it's playing into NVIDIA's architecture much more greatly than it used to be. And so you could kind of see it as 4 phases. There's the first phase, which is preparing all of the data that you need. Some of it is synthetic, some of it is real, some of it is human labeled and generated, pre-train the models. And then there's post-training, the third phase. And then there's the agentic inference. And agentic inference is extremely complicated. And so every one of those phases are complicated. The thing that's really great about the NVIDIA architecture, and we created this with NVLink 72, and was a big surprise on the world when we first created the world's first rack scale architecture it was hardly easy, and it was very challenging building the first generation. We're now in our third generation of NVLink 72 rack scale systems. We had to reinvent the entire supply chain, reinvent systems, reinvent the technology, redistribute our software, refactor our software. Everything, every aspect of it was hard. But what it allowed us to do was to create one fungible system that allows us to transition from data creation, data preparation, the pre-training, the post-training, to agentic inference. The benefits to customers is incredible. And the reason for that is because you've just spent, and we just mentioned, each gigawatt of technology and NVIDIA's revenue exposure in the Hopper timeframe with Hopper plus InfiniBand, and now Vera Rubin and CPU, and 3 types of different networking, because it takes that many types of networking to address the entire world's data center, not to mention the scale-in security networking and the scale-across multi-campus networking. So you could argue 5 different types of networking systems, and then of course Grok. And all of that increased our revenue contribution or revenue opportunity per gigawatt to $40 billion. So each gigawatt of data center increased from, say, $30 billion about 5 years ago to now $60 billion today. Of course, the productivity is tremendous. The performance is incredible in comparison, but you're talking about a $60 billion investment. And to the extent that you could use it across multiple phases of the AI lifecycle, run every single type of model you can imagine running on it, whether it's diffusion or autoregressive or state space or some hybrid version of that, every version of attention mechanism you can think of, small or large models, the investment that you make will be preserved and useful and productive for a lot longer time. And so I think our advantage in this new world is really quite extraordinary, and it could explain, why it is that our growth is actually accelerating. It was already large, but now it's accelerating. Let's see, you asked about Grok. I was super excited about Grok 3. We achieved a record token interactivity rate, extremely low latency performance generation. The team is doing fantastically. We spent the last several months fusing the NVLink architecture, which will be the core, and it'll be the core engine. And then for services that would like to have super high interactivity, super high speed token generation done, the throughput is going to be a lot lower. The cost per token will be higher, but you could associate it with high ASP services. And so for those companies, you could bolt on one of our Grok accelerators. I'm super excited about that. But the vast majority of the world's data centers will just be Vera Rubin NVLink 72.
Your next question comes from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. So the 70% growth in fiscal 28, which I guess is sort of calendar 27, so that's something like, I don't know, a $200 billion uptick versus the prior outlook. If I back it out, the prior outlook was $1 trillion over the 3 years. So this is probably 200 billion more. I was just wondering if you could talk us through the contributors to that increase across the different products of Vera and CPUs and Grok and everything else. And also, you talked about your price increase that takes effect in Q1. So I assume some of this is pricing. And I guess I'm also curious, and maybe I'm squeezing too many questions in here, but I'm also curious, just it's a constrained number. What would it be if it wasn't constrained?
Lame ass question.
The unconstrained would be a lot higher. It's we grew 100% year over year this year. The unconstrained, is significant, and so we're just going to have to go work hard to get more capacity.
20 cents.
And we have a large supply chain. We have a really gigantic supply chain, and so we have incredible partners.
and we've secured a lot of supply, but we just need a lot more. To break it down, the way to think about that is most people see just hyperscalers, and that's half of the picture. The other half of the picture is what we call AC, and that's all the enterprise, the neo clouds, the sovereign AIs. That part of the world is invisible to everybody, and the reason for that is because they don't buy custom chips. They don't buy chips one at a time. They really need an entire factory platform built for them. And so that's a space that we add just a tremendous amount of value. Now, of course, back in this hyperscale space, that's growing incredibly too, right? You know that they now have backlogs of $2 trillion. You know that when they stand up NVIDIA Compute, when that happens, their revenues go up, their earnings contribution go up. Compute is profitable, very profitable today, and compute directly translates into increased revenues. And so there's just a race to want to bring more NVIDIA Compute online, both at the hyperscalers, but what you don't see is just really tremendous opportunities outside the hyperscalers. But the other part of it is, and it's the reason why we mapped it out for you. In the case of Hopper, we were at about 18 billion per gigawatt. For Grace Blackwell, we're at about 25 billion per gigawatt. And for Vera Rubin, it's about 40 billion per gigawatt. And the productivity is, X factors increase in each generation. And so customers want to race to the next generation as fast as they can. Yeah. Meanwhile, because NVIDIA's compute is so productive, the tokens they're generating, the GPU hours they're renting out is insanely profitable, as you know. Their margins are fantastic. And so all of that is just simultaneously happening. I think the big picture is that we're going through this platform shift, and it affects every computer company. And every industry in the world uses computers. So therefore, every industry is affected. Every company is affected. And this new way of doing computing is intelligent. It's not based on retrieval of files, but it's now generating intelligence. And that requires compute. But the results you get is phenomenal. The results you get is tremendously better. And so, we're just seeing that across the world. Everybody wants to be part of the AI revolution. Everybody will have to be part of this computing shift, Jensen. And everybody has to build infrastructure.
Your next question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question, and thanks for providing all the transparency and all the commitments and guarantees that you have for a number of years. When I just add up everything that's in the CFO commentary, I get to a number of about 500 billion or so, obviously over the next several years. So I had a few questions related to that. First is that the takeaway that the sum of all your ecosystem investments over the next several years is in that ballpark, or are there other equity or other investments that could still be ahead? That's one. Secondly, if there is a specific cash, part of that that we should think about in fiscal 28. And then, Jensen, a lot of these investments are, designed to help the frontier labs, especially OpenAI and Anthropic. But both of them are designing their own custom chips. In fact, OpenAI just, in the last few days spoke about Jalapeno and their claims about being better than Blackwell and so forth. So how are you balancing this dynamic where you want to invest a lot in the ecosystem, but part of that ecosystem wants to develop competitive solutions? Thank you.
Well, we're building something very different. Whereas many of these XPUs are inference-specific chips for one cloud or one service, NVIDIA is a platform, an entire AI factory platform that spans the entire AI lifecycle that you can use in any cloud. It's in every cloud. You can run anywhere. We'll help you set it up anywhere. And so we built something very different. all of the AI services at some point are going to want to go around the world. And those data centers won't necessarily be just built by them. And also, I fully expect, and so they're going to run, and I think they're going to run on NVIDIA all around the world. And of course, I think our technology, I have 100% confidence that our technology will continue to be extraordinary for them, and that the economics of using our technology, whether it's from data processing to training to post-training to agentic processing, our technology is going to be extraordinary for them. They're going to use it. And so I have every confidence that they're going to be customers and partners of ours for a very long time. Now, having said that, taking a step backwards, investing in these two companies, or there are several AI labs that we've invested in, investing in these companies are once in a generation opportunity. I think the only regret that I have is that I didn't invest more and sooner. And two of the companies will likely go public soon, and others will follow. And these will be some of the most consequential technology companies in history. And so I'm delighted to be their friend. I'm delighted to partner with them. I'm delighted that they're building an ecosystem on top of the NVIDIA architecture. I'm delighted that they're counting on us to scale up. And I have 100% confidence that, through quite a long period of time, they're going to be utilizing NVIDIA compute for a lot of their computing. And so I feel great about it.
So Vivek, let me add a little bit more regarding the commitments and the portion within those commitments, which is our supply commitments. This is essential. This is essential for the raising of Vera Rubin today, as well as all next year. You can see that those commitments, the biggest parts of them are in the first 3 years, and we will use that to build the products that we need. This would also gives us the confidence in terms of our growth and revenue, given how much we have already aligned in commitment in terms of our supply, as well as capacity that we would need.
Your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Hi, thanks a lot. Jensen, I wanted to ask about open source. There's a lot of talk about that these models could gain share for workload in the US. You're obviously well positioned with Nemotron, but on the other hand, a lot of the end demand is being driven by these big frontier model companies. So there's a lot of investors that equate open models as being negative for the growth of those companies. So how do you sort of put and take that? Do you see the rise of open models as being good for NVIDIA or ultimately negative? Thanks.
The world will need both closed models and open models. And both closed models and open models are skyrocketing in use. I would say nearly all open models run on NVIDIA. And the reason for that is because NVIDIA's footprint around the world is the highest. And our architecture is the most fungible. It's everywhere. It's in PCs and edge devices like DGX Spark, which is doing great, all the way to robots and workstations and your on-prem data centers. Open models are doing incredibly well. Closed models we know are doing incredibly well. The frontier labs, their sales are skyrocketing. Their margins are fantastic. They're generating profitable tokens. They're only limited by the amount of compute. That is equally true for open models. And our position in open models is very good, because the CUDA ecosystem is literally everywhere. The open models are also foundational to just about every AI startup and every enterprise company around the world. It's vital to them. And the reason for that is because you should rent intelligence, strong intelligence, smart intelligence, wherever you can, which is the reason why, we rent it. And I encourage my employees to use the cloud services as much as they can. But every major company and surely every country and every startup needs to build their domain specific, their proprietary proprietary AI.
What was
They're
the title?
proprietary alpha. And the open models reaching frontier levels has made it possible, has enabled them to all do that. One of the areas where frontier models is vital is cybersecurity. You see the number of cybersecurity companies that are enabled by frontier models so that they could have distributed, massively distributed, continuously running autonomous cybersecurity systems to defend. Those companies are emerging. There's some amazing companies. They couldn't do it without open models. And so open models is both incredibly successful and has finally reached the frontier, but it's also vital to the American economy. It's vital to the world economy. It's vital to companies to build their own proprietary AI. You can't do it without one or the other. Both are going to be extraordinarily successful. And
A lot more fun.
And lastly, as you know, our market footprint of all AI models, I think we're the only platform, I'm fairly certain we're the only platform that runs every frontier model. And whether it's closed or open. Most of them were built on NVIDIA, and so they run great on NVIDIA. And so we're delighted by any model succeeding, so long as models succeed. I'm very happy. And both closed and open models are going to succeed, and they're both simultaneously driving our sales.
Your next question comes from the line of Ben Bryces with Melius Research. Your line is open.
Yeah, hey, thanks. I wanted to ask you a question, Jensen, about demand in a different way. You talked about demand growing 100% next year, and I wanted to kind of get a sense for a couple things driving that and even beyond that. And there's two concepts here. There's recursive self-improvement, which apparently at Anthropic and OpenAI is going very well with AI that improves itself. And even OpenAI said they could hit AGI by the end of this year. And with the developments in RSI as well as AGI, what happens to industry demand? Does it inflect further? And what does it mean for NVIDIA when those things take place? And how are you looking at that as a demand catalyst? Thanks.
I appreciate that. It's going to inflect further. Today, the vast majority of AI is prompted by people. I believe that this last month it has crossed. Most AI are now agentic. But in the future, every company will have a whole bunch of agents. We have 40,000 employees roughly. In the future, we'll have 400,000 agents, 4 million agents, and those agents are running continuously. They're running in the background. If you know anybody who builds edge, personal AI agents, and they run it under like a DGX Spark, and I know a lot of people who run it on DGX stations. This incredible workstation that we built, and you can buy it from Dell, and they're incredible. And these AI agents running on a DGX station runs 24/7.
Come on,
because you got stuff for it to do all the time. And so when the world goes to fully agentic systems, you're going to have agents running all the time, working with other agents running all the time, and those will be working in the background, improving your company, improving your lives. In a lot of ways, we're kind of recursive at this point.
As well.
And you could argue it's coarse grained, but every time you run through an agent, it reflects on how it could do a better job next time, and it updates the skill file. And so the skills document, the markdown, is updated at the end of every single one of them. And so next time you run it, it's going to get better. It's a kind of a loosely coarse grained self-improvement. And so you see that all over always. And so in a lot of ways, and for many tasks, we could say that we've already achieved AGI. I think all of those milestones and all those, they're kind of senseless at this point. I think the most important thing that matters for the industry is that, one, AI is now doing productive and useful work. Two, AI is generating profitable tokens. And three, if we had more compute, we could generate more profitable tokens, which results in more profit for all of the services. This is the exact phase where we're at, which is the reason why everybody's leaning in.
Your next question comes from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. If you think about the 100% growth you talked about in terms of the unconstrained demand growth you're expecting, the 70% you expect to fulfill in terms of supply, can you maybe talk about some of the, or rank order, some of the most acute constraints, whether that be things like data center power and shell availability, DRAM, wafer foundry availability, et cetera? If you can maybe help us understand, which are the biggest among those, that would be very helpful. Thank you.
There's something funny I could say, but I'm going to just not. Last year, one of the funnest things to do is just to go figure out where I go for dinner and who I have dinner with. And their stock price doubles the next day. I think the answer is our entire supply chain is challenged, and it's everybody is really running flat out. And more capacity is coming online all the time, which is one of the advantages. What's going to happen this year? It's not going to come online in just an instance in time, but it's going to come online every day. Yields are going to get improved. We're going to be doing yield improvement. We're going to work hard on working with every one of our suppliers, and so we have
been so broad and
it's not even next year yet, and so we've got lots and lots of time to work hard every day.
Other things,
and so at this moment,
I'm going to look into.
We have supply for 70%. We have more supply than 70%, but about 70%. Our demand is much higher than that, and we've got to go work hard, or we're going to be disappointing customers, and we like not to disappoint our customers, and we like to work hard for them. And so I'm going to need the help of the entire supply chain to help me out here. But they all know that. What I'm telling you about our needs for next year is exactly consistent with what I told them. Everybody's on the exact same song sheet, and I'm trying to be as transparent as we can because we're talking about big numbers.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Save us.
Yeah, thanks for taking the question. I want to go back to the gigawatts, the 25 to 40, and maybe try and understand, I think, Jensen, you said at some recent conferences that, that's going to further scale. So, as we think about the path even beyond Vera Rubin, we think about Vera Rubin Ultra and so on and so forth. Should we really conceptualize 40 billion goes to 60 billion, 80 billion? And then, I guess, underneath of that question is how do we kind of think about your ability to scale the capacity deployments? Is it a linear function, or is there something that, kind of unlocks your ability to supply more demand as we look through fiscal 27?
Great question.
Or 28, sorry.
Yeah, great question. Great question. And very simple. Is our goal to put as much compute on a plot of land? Is our goal to put more compute into 1 gigawatt or less? And so obviously, we would like the speed of light answer. The perfect answer is actually infinity per gigawatt. And so if we could literally get $1 trillion of compute into 1 gigawatt and one piece of land power shell, it would be a fantastic outcome. And so the answer is directionally in that direction. We started in the world of general purpose computing during Moore's Law. We were probably, pick your favorite number, but I'm going to go with something like $5 billion, $3 billion per gigawatt of compute with general purpose computing. And then eventually with Hopper, it was 18. Now Grace Blackwell is 25. Next, Vera Rubin is 40. And after that, it's going to be higher. And that's excellent. That's fantastic for the industry. It's fantastic for customers, so long as the productivity of it continues to grow, the durability and the fungibility continues to grow, then people are happy to invest in assets that generates revenues, generates profits, and helps them recoup their returns so incredibly fast. I mean, I heard the other day that return on investment capital is now less than a year. And we're talking about $50 billion data centers. And so that tells you something about the productivity of NVIDIA's technology and the rentability of it. I want to thank all of you for joining us today.
There are no further questions at this time. Toshiya Hari, I'll turn the call back over to you.
Thank you. Before we close, please note that Jensen will be participating in a keynote fireside chat at the Goldman Sachs Communacopia and Technology Conference in San Francisco on September 10th. He'll also be giving a keynote at GTC Berlin on October 21st. Our earnings call to discuss the results of our third quarter of fiscal 2027 is scheduled for November 17th. Thank you for joining us today. Operator, please close the call.
All right, guys. Well, as you can see, we missed all of them. We got 0 for 5 using this data we got here. So I'll be scoring this event here later with the transcript that we have from this quarter to improve the model. And I'll also be writing an article about what went right, what went wrong, everything went wrong, and why that might have happened, so that for the next NVIDIA quarterly earnings call, we have a better chance of hitting these numbers. So thank you all for watching, and I will see you in the future.